Hi, I'm Cheryl-Lynn Freeman from Untitled Business Services. One of our initiatives is to improve accessibility to knowledge, and through that we are using the Mzansi Empowerment Platform to be able to educate you on various aspects of business, tax and compliance. The three aspects that we are going to be covering in our business compliance course is looking at CIPC, and that is your basic secretarial duties that you need to cover in your business. The second aspect that we're going to be looking at, they say there's two things that's certain in life, that's death and taxes. Then I thought about someone that might be under 18 years old and that doesn't pay taxes, but then I thought, VAT, because everyone eats sweeties from a very young age, so we all start paying tax from a very young age as well. They say it's death and taxes. So our second topic under business compliance that we're going to be covering is tax. And then last but not least, if your business is booming, you need to start getting extra staff. And fortunately or unfortunately, in a country like ours, you have to deal with the Department of Labor, and there are very stringent aspects to that. We've got very stringent labor laws in South Africa, and it's very important that you as an employer are cognizant of the basic conditions of employment so that you do not end up at the CCMA and paying out more than what you wanted to benefit from that particular employee, either because maybe of lack of knowledge that you had, or lack of preparation for whatever expectation there was in terms of the act itself. But these are just some basic aspects that we're going to be covering in this course. So looking at our first aspect of business compliance, it's CIPC. And if you recall, when you registered your business, whether you did it yourself, whether you got an accountant or someone to assist you with it, was CIPC, and that was the one government department that holds all private company registrations. Some of you might have a closed corporation that you've registered. You can no longer register any new closed corporations. So it's only PTYs that I'll be referring to in terms of the different submissions that I'm talking to you about. But remember, it all goes hand in hand. So what applies for the PTY will also apply for your closed corporation that you have. So for example, you're registering your company on the 5th of January. What has to happen then is the 5th of January every single year, we refer to that company registration date as your birth date. So what that means is that you need to submit to CIPC your annual return just right after 30 days after the birth date of your organization or your company that you have. What do you need to be able to do your annual return and to be able to submit it? You need to calculate, to compute what your annual income is for that particular year. The year that I am referring to is going to be your financial year. And you might be frowning maybe at this point in time. If you want to know what your financial year end is, it's usually a period of 12 months. And you'll be able to see the end date on your CIPC document. It's called a Core 14.3 document. And if you look on that document, it will refer there to your, it could be March, it could be May, it could be February. And it's important to look at that, because that is the very same financial period that you need in order to produce reports that you're going to be submitting to SARS. So you calculate whatever your annual income turnover is for that particular year, and if you are working with your accountant or if you've got a CIPC account yourself, you are then able to do what they call an annual return calculator. You'll punch in your company registration number. Once you've done that, then you'll be able to input whatever your turnover is, and then they will generate, and you can press on the CIPC account or the website, you'll be able to press there and see what your annual return cost will be. Most of the standard cost starts from about 100 Rand, and then if you are entering millions, that's when you start needing to get more concerned, because then the cost will increase. So it's not that high if you are earning under at least R1 million in turnover a year. And then one thing that you need to know that's very important, and a lot of businesses that I've had to deal with as an accountant, they come to me because they either opening only now a bank account for a company that they've had open for years and not been aware of the fact that they need to submit the annual return. What has cost them in terms of that is that they're going to a deregistration process, and that business status will actually show up if someone checks your business status, and then it will automatically go into that status after not submitting a return for 2 years. So please ensure that you do that, and you will also incur financial penalties as well. So if you're making money in your business and maybe you started out and into 3-6 months into the business, make sure at least, I would advise you to keep at least 10 to 15% of your business income for administrative purposes that you can include as part of your operational costs. I find that people leave their returns outstanding for years, and at the end of the day you end up having to pay 2,000-3,000 rand, and then by then you would rather prefer to register a new company because it's going to be cheaper. You're not going to have the same track record, unfortunately. So make sure that that's one thing that only gets done once a year. CIPC will send you a reminder on your birthday of your company, and then they will notify you that in 30 days time your annual return will become due, and then you can submit, disclose whatever your annual income is for that period. They refer to it as turnover on the CIPC website, and they will calculate that for you. You will complete something called a financial accountability supplementary sheet, looking at your information in terms of who is taking care of your financial records. Are you using a manual system? Are you using an electronic system for that? The first module that we're going to cover under business compliance is CIPC, and that is the first government department that you engaged with, your accountant or whoever you appointed in terms of registering your business itself. So that is the government entity that your registration is held with, and that CIPC will also be the place where you would access any information that you require. There's also additional videos that you can watch on YouTube for CIPC if you are just wanting to get an overview of what are some of the services that you can access through CIPC. So you registered your business, so what's next after that? You have to submit an annual return. So that annual return is due 30 days after what we would refer to as your birthday. So that would be the date of registration of the company. If it was in 2019, 5th of January 2019, then now your annual return is going to become due 30 days after the 5th of January 2020, as an example. The challenge that I found in dealing with a lot of clients, sometimes I feel like a magician more than an accountant, because a client would want to enter into a new contract, do a tender, do something like that, and now I have to work magic for registration or administration that's been left for at least a couple of years. So please don't miss it. Make sure that you do it. It's linked to your SARS compliance as well. If SARS finds out that CIPC annual returns are behind, then they could register your business as dormant, and then they will update your status accordingly. And then when you want to do a contract, you need your tax compliance PIN letter. You're not able to draw it because your company is showing as dormant. So just make sure you manage that at least on an annual basis. It's just a disclosure of your annual income for your financial year. What exactly is your financial year? You'll be able to see that on the document called the Core 14.3 document, or on the disclosure certificates. You'll be able to see that it's written financial year end. So that is your financial year that you need to record all your financial transactions. You will use that financial year also to be able to compile your annual financial statements that you will then use for tax return purposes. Another feature that you have on CIPC is to be able to get a BE certificate. Why do you think this would be relevant? This is relevant especially for procurement purposes when it comes to dealing with the City of Cape Town, the municipality, with government as a whole. Also, if you have registered yourself on the Central Supplier Database, then this is a key aspect that you need to make sure, or requirement that you need to meet in order to be able to access any government tenders. What is required for your BE certificate? You need to know who the directors are on the company, what is the percentage shareholding. The shareholding is out of 100%, so you need to determine who exactly holds that shareholding. And you don't have to assume that because you have certain individuals that are directors on the company that they automatically are also shareholders. You can actually separate the two, where you have your directors and then you have your shareholders as well. You need to evaluate whether those directors or the shareholders involved, they evaluate you mainly based on ownership within the business. Is it a female owned business? Is it a youth owned business? Youth in South Africa is considered from the age of 18 years old up to 35 years old. And then also to look at whether you are a director that's listed or an owner that's got some sort of disability. And of course, if push comes to shove, you need to be able to prove whatever form of disability you have. So for those three aspects, there's preferential, what they call preferential procurement. So which means it's not even at 100% preferential procurement, it's at 135%. If you have 51% shareholding in the company or 51% ownership in the company, that means that you are 100% black owned, then you will automatically get to level 1. You have level 1, you have level 2, you have level 3, and you have level 4. And you will see on the affidavit you can get from the Department of Trade and Industry website, or you can just complete the questionnaire that is on CIPC. Please be aware of the fact that you need to know what is the email that was used when you initially set up your CIPC account. If you are going to do that, you need to know the cell number as well, because there are OTP pins that will be sent to that cell number. They will also do a unique check that they do on CIPC to see if you have any relatives that are working in government. If you do, then you will not be able to draw that BE certificate. So you need to have a copy of the ID number of someone that shares the same surname as you as part of that BE check. And then also make sure that you update your company details when you go to various banks and financiers. It's all about credibility. So you wouldn't want one address to show and then another document or bank statement shows another one. That's a time when questions start getting raised. So make sure at least also once a year you try and keep that updated. Another thing that I find as an accountant is often missed with my clients is knowing that your financial statements need to be produced 6 months after your financial year end. Remember, I said to you that you need to refer back to your 14.3 disclosure certificate document to see when exactly is your financial year. Then you need to produce annual financial statements. What exactly does that consist of? The basic financial reports that you need to have in there is your income statement, and that reflects your financial performance of your company. You need to have what they call the balance sheet or the statement of financial position, and that just shows the assets that you have, any amounts that you are owing to third parties, or maybe a loan account that you hold in the business, and then also looking at equity to keep track of the profits or the losses that you've made over a period of time. And from those financial statements, you also need to make sure that there are some financial requirements. If you are planning to use your business for funding, I'm a strong believer that you would rather be prepared and have or miss or not have an opportunity arise than not be prepared and miss an opportunity. So make sure that you always have your ducks in a row. You never know when you have a rainy day. We can look at the pandemic that we've been experiencing with Corona, and then you'll be able to know, my goodness, I haven't looked at it from this aspect. Even though you might be financing your business now, but as your business grows, so does the needs of the business, and you might need to be able to access some sort of seed funding or seed capital to be able to access additional resources. So it would be good that your annual financial statements are specifically drawn up by a registered professional accountant. You can always maintain your bookkeeping. I've got a course on different accounting systems that you can use for your business. I do believe in the Excel breakup. So you can use different cloud-based accounting systems. They are very simple, user-friendly to use, and so you can have a bookkeeper for that. You don't need to have a qualified accountant for that.